Good morning and good afternoon, everyone. Welcome to our seminar. My name is David Livitz. I'm a Managing Director here at Global Tax Network. I'm actually sitting in a very wet New Jersey this morning, which reminds me a little bit of the British weather, although I hear it's been quite sunny over there recently, so very envious of that. Thank you for joining us today. I'm joined by an experienced, illustrious panel of experts, and we'll be discussing UK, US tax, immigration, and employee benefit sort of issues and considerations between the UK and the US. And really, that is because we feel this is a good opportunity, a good time, as we see the sort of re-emergence of mobility. I think we're all sort of optimists, maybe realists as well, just around, we sense that there's something happening, and we thought it'd be a good time to start just sort of reopening those discussions around what it is to send people and employees, etc., between the two countries. So the panelists today will be focusing on, as I say, the tax, social security, employee benefits, and immigration of those sort of moves, and all the things that you need to think of, both from a practical perspective, planning, and any other issues that you may see. We're going to focus on two scenarios, which is one inbound into the US and then one inbound into the UK. So you get a sense of what the different aspects are depending on the scenario. And if you have any questions, on the right-hand side, there is a question box. Please do type of questions. We'll pick those up and do our best to address them during the session, and we'll hopefully have some time at the end for a Q&A session. But before I go any further, I'll allow the panelists to introduce themselves. So I'll start with you, Steve.
Thank you. Good afternoon from the UK. It's very hot and sunny here, so good to know that you've got some English weather in the States. My name's Steve. I'm Director for Business Development, specialising in employee benefits for Smith & Williamson. So we look after organisations from one employee up to thousands. So a fairly broad range and all aspects, including tax planning and individual advice. So my focus this afternoon is going to be very much on the UK benefits arena.
Thank you. And who was next? It was David, I think, next. Sorry, I'm trying to remember the order. David next.
Thanks, David. Hi, everybody. David Turrell. I'm the founder at Chime Global Benefits, also in the UK, in sunny Wimbledon in southwest London. I'm the founder of Chime Global Benefits. We're a specialist consultancy focused on helping small and medium-sized multinationals with their either mobility benefits, helping people move around the world, or domestic benefits outside of the UK.
Thank you. Lynn?
Hi, good morning. I'm outside of Philadelphia, Newtown Square, Pennsylvania. I work with David at Global Tax Network and work with companies that send their people to the US and from the US, and the mobile tax and social security issues that come along with those types of relocations and movements.
Thank you, Lynn. And Richard?
Hello, everyone. I'm Richard Watts-Joyce from partner at Global Tax Network in the UK, and we do the same thing as David and Lynn. We help companies move their employees around the world, look after the tax issues, and also assist individuals who are on their own for tax with issues of coming to and leaving the UK, particularly with regards to the US. So this is a key focus for us.
Thank you, Richard. And last but by no means least, Nira.
Hi, everybody. My name is Nira. I am Senior Manager of Immigration at Hudson, McKenzie. We deal with immigration globally. My main kind of focus is UK immigration, but we assist with inbound, outbound moves, and also we assist with mobility issues as well.
Thank you very much. And I'm going to turn to you first, Nira, actually, because I think immigration is probably the hottest topic right now. Certainly with, it just seems to be changing. You hear so many different things, and there's lots in the UK press about reopening, and the US is still looking at its borders and all the rest of it. So what's the current landscape? What are you seeing? What are you hearing? What's your advice?
Absolutely, yes. I think UK immigration has always been a hot topic. I have certainly been in the immigration sphere for over 20 years, and I haven't left yet, but particularly now. UK immigration has changed fundamentally as of January the 1st this year. With Brexit, there were vast changes that were made. There was an introduction of what's called the points-based system into the UK, and essentially this was to support EU nationals who, because of Brexit, no longer work in the UK in Europe without permission. With this change, there came quite a number of changes in terms of making it easier in certain realms. There's certainly a political kind of push towards that as well. So, for example, they have reduced the skill requirement to A level as opposed to degree level. So previously you had to have a diploma, etc., but now that's been reduced. The salary levels have dropped as well. And this is to kind of widen the scope for European nationals and other nationals to be able to come to the UK and make it more attractive. I guess one of the most important changes that has been made is what's called the skilled worker route. So this enables businesses to bring bring individuals from overseas to the UK to work. The UK is really trying to make it a most attractive place for companies to start businesses and to bring people over. Now, the skilled worker route previously was quite unattractive. You had to advertise the role. It's quite cumbersome, but the UK government has certainly made it a lot more easier to manoeuvre, if you will. So a lot of businesses are bringing that focus to the UK now, which is great. There's been a raft of other changes. There's a new kind of elite visa which is coming into force in the next few months, and essentially that's to attract the kind of people from the fintech space, essentially, making the process a lot more easier for people to come here and again to broaden business. There's also the graduate route as well. So previously students had to come here and then they had to join a company that already held a sponsor license, and I'll go into what that is in a second. But now they're able to work here for a couple of years without that kind of sponsorship to begin with. So as you can see, there's a lot of movements. Without going into the details where there are faults, globally, the UK is certainly trying to attract the brightest and the best, as they say. So and interesting, I wanted to say there's also the global mobility visa. We don't know what that looks like yet, but apparently there's one coming next year. I think there's about time they called something the global mobility visa, which will definitely be interesting. So sponsor licenses. So as I said, the skilled worker route basically enables companies to bring non-EU or US nationals to the UK. And in order to get a sponsor license in the UK, the company has to be established. So you have to have offices here. You have to have HR functions as well, which is really important. You apply for a license, and that license, there's a lot of kind of compliance requirements around that. So you may be audited by the Home Office. You need to ensure that there are adequate sponsor duties and HR functions in place before you can have a license. Because once you actually have a license, you have the power to actually issue work permission to an individual without applying to the Home Office, which is quite unique. To many countries, you have to apply to the Home Office for permission. So giving that responsibility to companies, obviously they're expecting you to be compliant. Now, with the sponsor license, a lot of companies like Great, they have made the process slightly easier. So we've certainly seen an increase in applications for sponsor licenses, but also it's quite worrying. So a lot of companies like Great, it's easy to get, let's get the license. Mr. X comes over for the US to join the UK and happily working for a few months, but a lot of companies leave their licenses after that and they don't remain compliant. Now that can have a lot of issues. So there can be reputational damage. You can imagine your company's name all over the news saying that you've got illegal workers there, migrants you have on the license, maybe sent home. There's so many different issues that people don't anticipate. There's also kind of criminal charges that can be placed against an authorising officer. So not to scare anyone regarding sponsor licenses, but I think compliance is certainly an issue which people kind of brush under the carpet, if you will, just to get that individual over. So the two types of certificate or work permission that people usually get, and especially from the USA, is the intra-company transfer. So that's transferring somebody over to the UK for a short period of time, and they're able to work here for 5 years. But that's for people who've already got 12 months employment, unless they're earning over 73,000. The skilled worker route, however, is for your new employee. So if you want to bring somebody over and they've just joined the firm, then that is also a possible route for them to join the UK. So you've got your license, you've issued the work permission, and then the individual applies for entry clearance and activates their visa, which is kind of a uniform process globally. There are delays in some countries quicker. The US has a great service. They have a super priority service. You can get your visa in a day. Some other countries, 3 weeks or more sometimes. So that's essentially the UK immigration process. I concentrated on the sponsor license and skilled worker because I think that's the area that the US, we certainly seen the US bringing people over to the UK on, and the sponsor license requirements as well. With US immigration, what we've really seen is that the visa ban ended on March the 31st, essentially, but I think the US embassies have certainly seen severe delays worldwide. Emergency appointments are available, but every embassy has its own process, so it's best to see what that actual process is. The travel bans still remain in effect, and individuals who are present in India, China, Iran, Brazil, Schengen area, and the UK, if they, the ban applies to them if they try to enter the UK within 14 days. Sorry, the US. There's two solutions to that, basically. The first one is whether they can travel to a non-travel banned country to begin with, and then they enter the US with a valid visa. So that's one possible solution for them. And then the second is that they request a national interest exception. So that's only if they're going to be providing what's deemed as vital services. And then finally, just on the US update, I would say that in-country filings for the UCIS is still acting as normal as they did before COVID, which is great to see. But there's still a recommendation for employers to really file their extensions as soon as possible, so that they are, they're accepted and there's flexibility if there is a denial.
Great, thank you. And I've got two personal questions on this, not about me personally, but just things that are coming to my head as we're talking, as you're explaining that. The first one is, are there any quotas? Have you heard anything about quotas? Because I've heard that, in my sort of discussions with people, immigration is not my speciality at all, but are any governments looking at limiting the number, or is it just?
No, it's a good question. We had quotas, so that was another thing that was actually removed. So last year, I think there was roughly about 20,000 visas under the skilled worker, formerly known as Tier 2 General, that was available to the whole of the country. So it's a big fight to get these visas, essentially. We had to advertise the role for a month, and there's a whole kind of process around that which wasn't fit for purpose. They've actually removed that now, which is great. They've removed the quota process, again making it more attractive. But it's suspended more than removed, which is always a questionable action by the Home Office. It means they could bring it back.
And that's interesting. So that's and do you think that's in response to the just to encourage the flow of those borders open, etc. That leads to my second question. I'm going to put you on the spot a little bit. In terms of this sort of the vaccinations, the digital, the health passports, and all. Do you think that's going to be a consideration in this process as well, or is it something completely separate? And again, might just be a viewpoint right now, because I know there's still a lot of discussion.
That's a good question. I think there isn't a link at the moment, but I think that there will be, because obviously with the whole entry clearance process, that's pretty much running normally, apart from priority services being lifted, etc. I guess with European nationals, they don't have to conduct the whole entry clearance. They can do it on their phone, essentially. But in terms of, that's a good point. I think they could in the future align the two, so that if you've had a vaccination, they can align the two into this process if it continues.
Yeah, so I know that there's in the press there's conversations around Boris and Joe having that conversation about that air bridge between the UK and US. And I just wondered if you'd heard anything, but that's. No, thank you. That's great. So with that in mind, so the immigration piece obviously really important, and it was almost like the first step that obviously many companies sort of consider and go through, make sure you've got the right visa or work permit in place. So Lynn, I'm going to focus now, just change the tack into obviously our favorite topic, which is tax. I mean, who wouldn't want to listen to this piece? So Lynn, what are the issues from a tax and social security perspective?
So we'll talk first about movement into the US. So from a US employer consideration, we'll want to make certain that all the steps have taken place, all the corporate registrations have happened, and the employees have the appropriate visas to come to work in the United States. So here we'll want to make certain that we appreciate that the payroll and corporate risks are involved with having the proper reporting for your individuals who are here working in the United States. And here we have payrolls that may be processed on a monthly basis, and there's also potentially bi-weekly, semi-monthly, and weekly, which may vary from what you may see typically in the UK on a monthly pay basis. So the first step would be to have the individuals make their application for the Social Security number and make sure that is in the employer's system so that everything can properly be put in place to get pay delivered to the employee. So inbound people may or may not be covered under a tax equalization policy, which is beyond the scope of our conversation today, but we'll speak to some issues that involve that, such as an inbound person from the UK. There is an agreement for Social Security to exempt from US Social Security if they're continuing to pay into the UK NIC with a certificate of coverage. But we'll say that we're having people come inbound and they're responsible for their own taxes. So they come into the United States and the employer is obligated to report and withhold for US federal tax, state, local jurisdictions, localities, Social Security, and Medicare. So there's a lot of reporting and withholdings that are associated with being an employee here in the US. So many jurisdictions want a piece of your pay. So something that we want people to have an appreciation for when they come here. You get a pay statement. Who is FICA and why is he taking 6.2% of my income? And here in the US, that's subject to a cap. So our FICA taxes have a cap up to, let's see, I think that's about 142,000 or so. Our Medicare tax is 1.45 up to 200,000. And then that hits a surtax over and above that for a total of 2.35%. So, and then of course we've got states that come into play, and 41 of our states assess an income tax. So that's another tax cost to think about as you're relocating here into the United States. We touched on, as an employer, you have the obligation to report all types of compensation that are paid to your employees. Your base salary, supplemental compensation such as commissions, bonuses, equity compensation. That's a challenge in and of itself to have that multi-year compensation component paid to your employees. And when you cross borders and have to report that in perhaps more than one jurisdiction, that leads to another challenge. And that's a topic beyond the scope of our topic today, but do want to stress the importance of having that properly reported. And if you have an interest, there's various resources that are available on our GTN site, some white papers and recordings that may be of interest if this is an issue for you and your companies. So employers have the obligation to report on a per pay basis and on an annual basis, report, as I said, all of the items of compensation, not only the comp components, but any benefits in kind, housing allowances, any type of relocation, those kind of components have to be captured as wages as well. So as an employer, you may have process income payments via payroll and then need to accumulate any items that might have been paid by a third-party vendor for the relocation, 8 accounts payable, and have a year-end reporting on what we call a Form W-2 that will report everything that you've earned, and that is what needs to be reflected on your tax return. The IRS will look to match those components, and if we don't reflect that appropriately, IRS will issue a tax notice. And if, as an employer, you may have missed something, you can always make an adjustment with what we call a Form W-2 correction, W-2C, to make sure that that's appropriately reported, and the Social Security especially, all of those items are paid and remitted appropriately. And then, as we made mention of some of these payments that may have implications in more than one jurisdiction, inbound people to the United States, when they start becoming US residents, are taxed on worldwide income. So, Richard will speak to the fact that, of course, the UK wants to see a piece of their income attributable to the time that the employee was in the UK. And the US says, you're here in the US, it's reportable here, taxable here, but there could be relief in the form of a foreign tax credit from withholdings when there's a corresponding UK withholding tax. So a challenge for payroll to manage and work through, but wanting to maintain a good employee experience. So dialogue is important to make certain that the payrolls are adjusted and reporting is appropriate as required, so that there are no risks to the company from a reporting and withholding perspective, and that the employee has an appreciation for how this multiple jurisdiction withholding and reporting comes into play for them in particular.
And Lynn, just to pause you, the question has come in, and I think it's relevant right now so we don't keep bouncing around. It's, are there any exemptions from US payroll withholding? So if someone's under a foreign withholding,
yes,
can you just ignore US withholding?
Well, we can't totally ignore withholdings, but we can make a submission for a Form W-4. So the IRS will look to see a Form W-4 fulfilled. And if, based on your fact pattern, everything is subject to another jurisdiction tax in full, then we would create the submission to reflect that and adjust our withholding for federal purposes. But then again, we've got state, locality, and Social Security that may come into play. Does that answer that question?
Yeah, that's perfect. Yep, that's good. Thank you.
All right. So that covers the mindset of the employer, and then as an employee, individual US taxpayer. As I said, on the employer side, there's all the withholdings for the multiple jurisdictions that the US needs to fund. So in addition to the income tax, federal, state, locality, Social Security, Medicare, there are other implications for an individual that might come into play, such as corporate income tax. If a person comes in and has a non-US business that they are involved with and they come into the US, there's trust taxation, there are estate tax and gift tax rules. So all of these types of taxes should be brought to the attention of someone who's planning to come into the US, so that appropriate planning can take place to have an understanding and perhaps plan for mitigating any tax surprises coming into the US. So when Nira was talking about visas and residence in the US, the term residence is different from an immigration perspective versus a tax perspective. So here in the US, green card holders are resident. You're taxed effectively as a US citizen when you're here as a green card holder. If you're in the US holding an F visa as a student or a J trainee, you're deemed to be a non-resident for income tax purposes. In the US, we look at a substantial presence test to have you start to establish US residency, and looking at a 183-day kind of rule to trigger you as US resident. So in your year of arrival, there may be planning opportunities to look to say, I could make an election to be treated as a full year resident, report all of my income. As a married taxpayer, I can file jointly. Beneficial tax rates are associated with that, and claiming a credit for my taxes that I've paid to the UK before I've come into the US. And that might give me a better answer than filing as a dual status taxpayer who would file on a married separate basis and report all my income on a married separate tax rates. So once you're here, you're taxed on worldwide income, on your earned income, your unearned income, anything that generates income to you, or maybe it doesn't generate income, but you're holding a certain investment that draws taxation and some disclosures here in the United States.
Great. Thank you. We'll come back to you a bit later because we've got it the other way around. But Richard, just from the UK perspective, so just that interaction, and I think the big one is payroll, but what else do employers and employees need to think about from a UK perspective outbound?
Yep. Well, David, you should know, as you've done this yourself. The departure issues are actually fairly simple, and I'll just go through a few of the key issues. But somebody leaving the UK can leave the UK tax system and wave goodbye to it if they structure everything correctly. Unlike the US, where you have to carry on filing wherever you are. So that's one big advantage. But there's a couple of things that we've seen in HMRC audits that they like to pick up on from an employer's perspective. And it sort of ties in a little bit with what Lynn was saying on Social Security and what you just said, David, on payroll. A lot of the obligations for people leaving the UK have been pushed onto employers where they're making assignments, because the UK employer is an easy person to go and turn up at the offices normally and penalise for doing something wrong. So a lot of this is pushed onto the withholding. And two sort of key things for employers would be, one is national insurance. So Lynn touched on the fact that there's an agreement between the UK and the US that allows somebody to either switch to the overseas system or stay within the home-based system. A lot of UK employers, fail to grasp exactly what they should or shouldn't be doing with national insurance, and will give someone a P45, take them off UK payroll, consider it a local transfer to the US, and stop paying national insurance. But actually, in some cases, there may still be an overriding employment agreement with the individual or an expected right of return. And in some cases, actually, HMRCs will say national insurance should have continued. They don't really mind where you're paying somebody from. It's all based on the facts and circumstances of the transfer and the length of the transfer, particularly if it's under 5 years. Even if you move someone from a UK payroll to a US payroll, you're not going to escape the national insurance liability simply by doing that. So that's one thing that employers get caught out on. The other thing is trailing payments, which is a huge issue. When I said somebody can leave the UK and wave the tax system goodbye, to an extent you can, but in the first couple of years after leaving, you may have earnings that relate to the UK that are paid out once you're in the US. So a classic case would be a bonus that relates to the calendar year. Let's say you leave the UK in November, the bonus is paid when you're in the US in, say, March, but 10/12ths of the bonus related to the period you're in the UK, and therefore HMRC will expect that to go through UK payroll, even if someone has come off UK payroll and left. So the UK employer still has a lot of obligations to track things and work out, this person's gone, but we need to make sure we know when bonuses are paid and we're capturing the right amount in the UK, and stock benefits. So options that are granted in the UK that are exercised in the US several years later. Again, there could be a UK payroll withholding issue for the part that related to the time that was in the UK. Those are the sort of key things for an employer. For an employee, as I said, it's the big thing is checking tax residency. Do you break tax residency, or how can you do that? Take care about return visits to the UK, track your days, make sure if you come back to the UK early, your assignment ends early, your tax status may change. So it's all about getting that information in advance. And if you can break tax residency, then the UK is interested in your UK source income, which might be UK investment income, rental income. It will still be things like capital gains. The big one people are missing out, forgetting about, is there's a new capital gains tax return. I say new, it's been around for a couple of years, but I think people have just only realised. If you sell a UK property as a non-resident, you have to file a tax return and pay the tax within 30 days of sale, which is not just waiting to the end of the tax year and putting on your tax return anymore. Again, in rental property, you need to apply for a non-resident landlord scheme. Otherwise, your agent has to withhold 20% tax. And other small things like, do you want to pay voluntarily into a UK pension to maintain your state pension record? All the sort of things you want to think about before you go. make sure everything's in place. But the key thing really is making sure you're aware of the days you can spend back in the UK, or the consequences of not breaking tax residency and being resident in 2 countries at the same time. It's not a huge issue. The tax treaty will protect you from paying tax twice on those things, but it's just understanding in advance. And we've seen some people who've spent 2 days too many in the UK, and it's created a huge raft of tax issues. So we always like to prepare people when they leave and make sure they're aware. As you know, GTN has tools to be able to track those days, and maybe flag when you've spent a little bit too much time back in the UK. But all of these sort of things, it's all about preparation and then taking advantage of the fact that the UK is quite an easy system to get out of.
Great, thanks, Richard. I mean, just easy, right? Just really easy. But then I'm going to focus now, go straight to Steve, because we say it's easy, but the benefit side, I imagine, is something really quite tricky to consider and navigate. So what do employees and employers need to think about?
Well, in terms of leaving the UK, firstly, maximise the NHS. So go and get your eyes tested, go to the dentist, go for full medical, maximise those facilities. Pension-wise, dependent on what point in the tax year, have you maximised your pension contributions in the UK? You can maybe go back, use some unused allowances in previous tax years. Suggestion then will be taking some individual independent advice to really ensure that you've in a sense maxed out on UK tax concessions there. Making sure things like your personal planning is up to date. So are you planning on if you like a short break, so you're going to be out of the country for a few years and coming back, so things like wills up to date, enduring powers of attorney, those types of things. So in terms of the UK benefits, really maximising, I would suggest maximising on the state's benefits, really making sure those things are completely up to date, and really in terms of benefits in the US, maybe that's a good segue to hand over to David that can cover off sort of entry into the US, so that the consideration of that transference of benefits.
Yeah, thanks, Steve. That's a good point. So I think that the key thing I'd bring out is that whenever you're sending people overseas, you sort of need to wrap them up in cotton wool a bit and start thinking about their health and well-being probably 6 months before they go. And so one of the really important things that I would always say to an employer is do health screening, or really encourage health screening for your people who are about to embark on a long journey or a long mission for you. And not just the employee, but also their family. And one of the biggest causes of mission failure or failed assignments is actually not the employee, it will be the spouse or the children, perhaps not being able to get into a school they like, or not being able to access medicine that they require, which will then, that's a big expensive waste of everyone's time. So do those things first. The other really key bit of the duty of care for anybody that's traveling for you is to make sure you've got travel insurance for them. So often UK employers who are sending people overseas completely exclude the US from their vision, and that's because the US from an UK insurance perspective is always seen as very expensive. So they may have a travel insurance policy which perhaps doesn't list the US entity if one exists already, or perhaps excludes it onto a different policy because of the cost of providing that insurance. So make sure that your US entity is covered. And then as people get to the US, I think that the really crucial thing, it's in the news all the time, is US healthcare. And it's a timing question really for when you land people in the States as to what you do and when you do it. From the UK employer's perspective, it is vastly expensive. You're talking about $8,000 just to cover an individual. It might be $21,000, $25,000 to cover a family or more. So you need to budget for this when you're sending people out. But you also need to think about the timing. The US system is fundamentally different to the UK system, where everyone can go to see a doctor free at the point of service. It's not like that in the States, and so what a lot of employers that are sending people overseas will do is put some kind of bridging insurance arrangement in place, which will make it feel a bit more like home, and also enable employees to go and see whatever doctor they would like to whenever they wish to. And so using something like an international private medical insurance domiciled in the UK or even domiciled in the US will give that employee, a more kind of seamless experience, if you like, landing overseas. Actually, the rest of the benefits market is quite similar to how it is in the UK. You've got 401ks in the States and life and disability insurances. For very small groups, if you're just sending 1 or 2 people, they can be very, very difficult to procure. But I would always encourage working with a broker, and don't try and do it on your own. It's just fundamental, because if you find the right broker, they can plug into the right sort of deal. So shop around for the right broker. 401k, that I would never profess to be an expert. It's an absolute minefield as far as I'm concerned in terms of the legislation. So again, work with a local expert to make sure you have the right designs in place. There's lots you can do for expatriates: international pensions, international group life and disability. If it's appropriate, again, work with your advisors to make sure that happens. But number one in my mind would always be medical. Make sure that your employees understand what it is they're going to, and beyond buying the insurance, communicate it to them. Tell them as much as they can. Put them in touch with experts. Put them in touch with the insurers. Give them all the glossies to make sure they understand what it is that they're going to, and expect phone calls to be there to help.
Yeah, that's really good advice, actually. I think, but the health and also the will, and I'll confess that that's something I need to do. So thank you for reminding me. Before we move on to the next scenario, Nira, is there anything that's come to mind, or any of the panel actually, just in terms of that inbound into the US? Anything, just hearing everyone else speak that comes to mind? If not, we'll move swiftly on, because I know we're up against a clock. But Nira, any thoughts from you? Or
Stage for me, no.
Fantastic. Okay, well, let's switch gears and let's turn it the other way around. And now we're going to go inbound into the UK. And this time I'm going to start with Richard to talk about a US national coming into the UK, and what's, from a tax perspective, what are the issues there?
Thanks, David. Yeah, this is where, for me, tax gets really exciting, because leaving the UK is not as interesting as advising people who are coming in, because there's a lot you can do with regard to planning, saving people a lot of money, but you have to get everything right from the start, which is the key thing. Is we always like to be contacted by people saying, I'm thinking of going to the UK, versus I've been here a year and I think I've got to file a tax return. A couple of things, I'll just split it into a couple of things for employers, and then look at a little bit at employees. Employers, the first thing I'd say is that sometimes you've got people coming into the UK that aren't assignees and are just here on a business trip. Maybe they don't need a visa. And even with those people, you've got to make sure that you have what's called the short-term business visitor agreement with HMRC, because without that, even one day in the UK could trigger a withholding requirement. And what that agreement says is that if you're likely to be exempt from tax under a tax treaty, then we're going to let you have an exemption from payroll. So that's the first thing. That's not even assignees. There's something you need to make sure you've got. If you haven't got that, and you're an employer receiving business travellers, or expect to when restrictions lift, now's a good time to think to put that in place and make sure you're covered for those types of moves. When you're looking at more formal assignments, the policy at the start and before somebody moves is critical. We have quite a few different things in the UK that you can qualify for in terms of tax relief. One is assignments of up to 24 months can be, UK can be deemed a temporary workplace. What that means is if you're paying housing for the assignee in London or somewhere expensive, all of that can be provided tax-free for the assignee. Sometimes if the family's there may be a portion that's taxable for the family. But if you didn't think about that and it was a genuine 18-month, 20-month assignment, and you didn't document it correctly at the outset, it might be quite hard to put that claim in. So little bits about planning what to go in the assignment agreement, what can you take advantage of, what benefits are tax-free or there's tax relief or available in the UK that we can put in and take advantage of before somebody actually arrives in the UK. And that side of planning is critical, often savings for the employer as well as the employee, depending on the tax policy. Things like relocation, we have £8,000 of qualifying relocation benefits, tiny. It's been £8,000 for years. I don't think HMRC appreciates costs may have gone up in the last however many years. I mean, it was 8,000 when I started tax, and I won't tell you how long I've been doing it, but you can probably tell it's quite a while. So you can take flights as well, but the employee is going to be taxable on the balance. So you have to consider, do I need to gross that up? Is that a cost to me? If you want the employee to be whole, you may have to meet the tax on the excess relocation costs over £8,000. And I've seen some clients who've spent well over £100,000 on relocation. One who, brought their dog, they brought their nanny, they flew first class, it ramped up and up and up, and only £8,000 was tax-free. The rest had to be grossed up at 45%. So consider what you're offering as well. It's the other thing, and bear in mind that the UK does like to tax relocation. Make sure people are on UK payroll, and that was touched on earlier in the sense of, is there an exemption in terms of not going on payroll? There can be. If you don't have a taxable presence in the UK, no business in the UK, you're hiring a UK employee to work for a US company and they're working from home, then potentially no. But if there's any kind of taxable presence in the UK, you have to operate withholding, regardless if you're paid in the US and no one's ever paid in the UK. You will have to set that up. There's no real exemption other than that agreement where somebody is in and out very short term. Take care with reporting of benefits on P11D. That's the UK W2 sort of equivalent, where all of the non-cash items get reported by the employer at the year end. Relocation is difficult to capture. A lot of the foreign assignment benefits are difficult to capture. And one that's often missed is US paid, employer paid medical premiums. So if somebody is still being paid US medical premiums in the US by the US employer, and they're in the UK working, over here, that's a taxable benefit. And it's very hard when we're preparing tax returns for clients and we're going out trying to obtain that information. It's very hard because everyone said, it's not taxable, it doesn't appear on the pay stub. But again, that's something that HMRC always looks for when they're conducting an audit into the expats, because it's commonly missed. So take care with things like the reporting of benefits. What's not taxable in the US may well be taxable in the UK, and of course vice versa. And then we touched on stock-based benefits on the way out. Same applies on the way in. We'll need to consider the UK element at vest or exercise of RSUs, options, things like that. How much relates to the UK between award and vest or grant an exercise? How much needs to be reported in UK payroll? And again, tying in with what Lynn said at the beginning, you can't do the UK work in isolation. It needs to be done jointly with the US to make sure what's being reported in the UK reflects what's being reported in the US, and there's no overlap or double tax costs. And I would say sometimes the planning is about avoiding double taxation as much as anything else, because it's so easy if you don't sort of make sure both sides are reporting the same way to end up paying more than you need to. Just moving quickly onto the employees, this is where the UK isn't a tax haven, but it does have some interesting tax benefits for people moving in. One is we have something called domicile status, which means effectively that individuals moving into the UK don't have to pay UK tax on overseas personal income or gains on overseas assets, as long as they don't bring that money in. So that kind of is something to sort of make the UK attractive to very wealthy individuals coming in who are not going to be tax on their personal wealth. That lasts for 7 years, and then you have to pay for the privilege of maintaining it. There's a cut-off of 15 years. You can't do that anymore. But it's a good piece of tax planning. But again, you need to be very careful you don't accidentally bring something in that creates a liability. The other big one is overseas workday relief. And what that means is if you're coming from the US to the UK, for the first 3 tax years of residency, if you you have any business trips outside the UK, you can potentially claim an exemption from UK tax on the earnings that relate to that. So very simply, if you had 240 work days in a year and 24 of those are spent outside the UK working in other countries, potentially 10% of your earnings could be tax-free in the UK. And that claim is normally made on a tax return at the year end. So you're getting a refund of the tax you paid through the payroll, but you have to set up your bank account arrangements correctly at the outset. So these are the sort of planning things you need to do at the beginning that you can't do at the end retroactively, but can provide large tax savings. And it's all part of HMRC legislation in the manuals. There's lots of guidance on it. They don't publicize it very much, but it's legitimate planning that can be used by anybody coming into the UK. Not if you're a British citizen, but if you're a non-domicile coming into the UK, 3 years of those claims, and you've still got the exemption from personal wealth as well. One last piece: if you're still paying into a 401k plan when you're in the UK does recognise that as qualifying. So you can get a deduction against UK tax for payments you make into the 401k. The downside is the UK is not very generous at all on limits in terms of how much you can put into a pension. And they've reduced it again. It comes down to £4,000 maximum when you hit £312,000 of total earnings, including the pension. So, you know, if you're on a salary of more than that, then pensions aren't really very useful tax planning in the UK anymore, and you're going to have to look at some other way of planning in tax efficiently. But still something to look at. Again, if you're at a lower rate of tax, you can have up to £40,000 of pension claims per year. So we often see people, when they file their tax returns, don't realise that they can claim this, and we can claim that on a tax return and get some tax relief for US paid pensions as well. And that's all these things are just part of the UK-US treaty, agreed basis of who gets to tax what first, and what claims can be taken in one country for payments made in another. So very, very, very briefly, plan before you get here is the key. And if you've just arrived, probably unlikely to be speaking to anyone on this that's just flown in at the moment, but anyone who is planning to come here, have a look at that. If you have been here a while, you're still within that 3 years, there's still time to do something about that and take advantage of a little bit once things open up. But the key is in the planning, David, and doing all your homework before you get here, really, and it can reap rewards.
Thank you very much. Yeah, good. That is good advice. It's just, yeah, there's so much you can do, both sides. But Lynn, from a US perspective, outbound, any burning issues?
Well, outbound from the US, we'll want to know, are you into the UK? So are you departing as a US citizen or green card holder, or are you departing as a other type of visa holder? If you're another type of visa holder, your federal and state obligations are going to be pro rata based on the time spent in the US, as Richard made reference to. But if you're a US person, despite the fact that you're in the UK now, you're going to be subject to full US reporting for your equity and other types of supplemental compensation items, fully taxable with an offset for your UK source as a foreign tax credit. And in addition to relief for US citizens, mostly to the UK, your most benefit is coming from the foreign tax credit. But if you're going to other low tax jurisdictions, perhaps consider the foreign earned income exclusion if you are a qualifying outbound US citizen or green card holder that might qualify under that realm. And then, as Richard said, planning, educate US people. If you're investing in non-US funds, you're facing those same challenges for reporting, onerous reporting of non-US funds, passive foreign investment companies, those types of things that create challenges. So just educate, have an appreciation for what you're investing in before you do so that you understand what is going to happen to your particular tax situation.
Fantastic. Thank you for that. Thank you for keeping that short, because I know normally we have tax briefings that probably last an hour each, so trying to squeeze this into small segments is a challenge. So thank you, guys. Steve and David, over to the benefit side, because again, I don't want to underplay this. This is equally as important coming inbound into the UK. Any sort of things to think about?
Yeah, I think so. For maybe a smaller entity in the UK, maybe employing 2, 3, 5, 10 employees, the common, really picking up on the points already Richard and Lynn have made, that pre-planning, so that there may not be exemptions from payroll. So we find companies then having to play catch up and getting something set up really quite quickly for payroll, completely overlooking auto enrolments. So we have in the UK now, pensions have become compulsory. So the assessment of whether that employee is deemed as a worker, therefore, do they have to be enrolled into the pension? So what we see a lot of companies left it to the 11th hour, not considered payroll, not considered pensions, haven't thought through definition of pensionable earnings, haven't thought through who's doing the statutory reporting, and consequently get fined by the pension regulator. So yeah, around pensions, a lot of pre-planning, and we have seen companies try to do it, for want of a better word, on the cheap, and then having to revisit that because they've got it horribly wrong. And again, there are tax treaties between the UK and US. It's not really possible to transfer 401k over to the UK, but it is possible to transfer UK benefits back to the US. So just consideration to what type of pension is being set up. For larger corporates, bringing US nationals across, generally speaking, we find that bit is fairly well set up. They're familiar with the hoops and hurdles. So the rationale and thinking through payroll compliance for pensions is really, that comment is for some of the smaller employers. Yeah, compliance being the watchword, be it tax, be it pensions. Inbound into UK with other benefits, I think the point Lynn made around education, so to US nationals really understanding that certain benefits, especially things like private medical insurance, how does that work? Because a lot of benefits are what's known as P11D benefits, are taxable benefits. So the main one we see is around pensions, because there are regulatory issues. Other benefits, it's really maybe mirroring what they're used to, comfortable with and familiar with in the US. We would always recommend maybe sitting down with an advisor, an independent financial advisor, just to walk through the differences, the nuances, and depending on the level of earnings, are there going to be tax traps they're going to fall into? So there's certain aspects of pensions that can come back and bite someone. So it's just really making sure that those ducks are in a row. In terms of other employee benefits, there's a plethora of benefits that employers could and should consider, the core being death in service, i.e. life cover, private medical insurance, and dental. And David, would you add more to that?
Yeah, I'd say, I mean, it's similar to what I said for people traveling the other direction. The use of bridging insurance is quite important sometimes. And one of the key reasons it's important for people coming into the UK is that the way the National Health Service works here is that it's always the first port of call. It's always primary care is the NHS. So if you want to see a GP, it's through the NHS. And that then leads to private medical insurance after that. So to be able to claim on your private medical, you have to see a GP first. Some people coming in, first of all, won't understand that because it's a very foreign concept to some people. So educating around that. Some people won't actually qualify for NHS access, and that will depend upon their visa situation. But often what American expats might have is some kind of bridging insurance, which, you know, the US domestic insurance can have as an add-on, which will enable people to see a GP privately, because there are private GPs here, but they're not free. And I think the other thing that's often common, and again, this goes both ways, is the use of virtual doctors as a way of really helping expats out, because if you've got a virtual doctor service, you can see a GP, you know, in your own country who speaks your medical terminology. That can be super useful. The other really crucial thing about this bridging insurance is it will cover more often than not chronic conditions, and that's something which UK private medical insurance typically won't cover. So it might cover a diagnosis, but then not ongoing treatment. If you have your expats on an expatriate plan, you know, they're out of their normal healthcare system, being able to access treatment for instance, ongoing knee pain or ongoing back pain, or it could be a condition which needs regular medicine, that kind of thing. You won't necessarily be able to access that through a private medical scheme in the UK. And within our NHS system, waiting lists can be quite long, and perhaps you won't get access to the same drugs or medicines that you would do from the States. So it's that duty of care bit. The other thing I always see, and again, to Steve's point, you kind of have to unpick this. People do it at the 11th hour. Is American firms bringing people to the UK assume that you can pay cash instead of a pension, and may put that into an employment contract. That's quite illegal here, and it has been for a few years now, and so you don't want to get fined. And so the pension bit is really, really important, but actually educating expats on that is equally important. So those are the bits I'd probably add.
Yeah, thanks, Dave. I just picking up on a point there, we also see a lot of where there's exclusions within, as David's already said, within the UK private medical insurance, or companies just assuming they can just set up a new scheme, but the headcount in the UK might not facilitate that. So I think back to Lynn's point, that pre-planning, preempting, understanding on a group basis what schemes can you set up for employees in the UK, and if it's just going to be a small headcount, there might be certain benefits that they're prohibited from having.
Thanks. Do you know, the question going through my mind is in that employee benefits, or even just the benefit side of, you know, this trend of remote working, and, you know, on the rise, we've seen an acceleration of it over the last sort of 15 months or so. It just feels like there's almost time for the employee benefit, you correct me if I'm wrong, the sort of benefits world to kind of harmonize a little bit and actually appreciate that there's, okay, it doesn't work and there's some pitfalls now, but could there be some coming together in certain aspects of insurance or retirement planning that just actually okay, that's fair enough. You can't see that happening. There was nothing.
I think certainly in the UK, the amount of money the Treasury spent with the whole COVID situation, they're going to need to recover that money. So in terms of tax breaks around certain benefits and things, can't see that happening. And I think certainly we are seeing in the UK a hardening of rates, because there's an expectation, anticipation of increased claims where people haven't been to get lumps and bumps checked out because of the lockdown and COVID situation. Right. So I think we are going to be entering into, in a sense, another era of uncertainty around benefits. And certainly what we have seen in the UK in the last 12 to 18 months is a significant increase towards digitalization. So digital doctors that not that long ago, a lot of people were very uncomfortable with using. Now most people are very comfortable with that. But certainly what we've seen in the UK is a shift for employers away from bright, shiny benefits to a position of employee well-being is front and center, and benefits are then pillars that support that. So we've seen a lot of companies just stepping back, reappraising what do they provide. So fruit in the workplace doesn't really cut it now. So right. It's and an increased awareness to, as I think David mentioned, benefits that support the family unit. So again, through lockdown, people realising actually my benefits don't support my family unit. So there's an increased awareness for employers as to what they're actually doing. So maybe a step away from bright, shiny benefits to more core benefits with a lot of education and advisory piece are sat around that.
Superb, thank you. Well, I think we've got a minute to go, and I just wanted to say one thing. The theme I'm sort of hearing is planning. Everyone sort of mentioned it at some point. Nira, right at the start, mentioned it from an immigration perspective. That's obviously quite important in timing and getting the right documentation and the right visa permit in place around that. So planning seems to be the key message, and I think that's why we all thought this was relevant right now, is to start, as we start to reopen, is thinking ahead and actually getting, putting that planning in place to look at the sort of most cost-effective way of sending people between the UK and US. Thank you all very much for your time and your expertise and imparting your knowledge. That's fantastic to listen to. And thank you everyone for joining us. And we're sending around a recording of this, I think tomorrow. But in the meantime, thanks very much. And any questions, please contact one of us. Thanks very much.
Thank you.